everybody to another episode of Expert Q&A here on Up and to the Right. So I want to introduce Graham Collins. He's the head of growth at Quota Path. We're going to be talking about comp plans today, something Graham knows a ton about. So Graham, real quick, give people an introduction to you and Quota Path.
Yeah, for sure. So Quota Path is a commission tracking and quota attainment tracking tool that is used. It's freemium, so anybody can get started on it, but brands use it to, or software companies, really anybody who has a sales team can use it to track how much commission needs to be paid out, and reps can see that transparency as well, which we'll talk about, I'm sure, is rep transparency and commissions. And my background, head of growth, I tell people I do a job until we hire somebody who's better at it than me, and then I get fired and move on to the next job. Before this, I ran sales teams and most recently ran about a 45-person SDR team.
Cool. Okay. Well, I always like in these conversations to just get back to basics a little bit. We have a lot of folks who, listen to these conversations at different, levels in their career and kind of levels of experience. So starting to talk about comp plans, what are the basics? What are the fundamental things you need to consider when you're building out comp plans?
Yeah, for sure. So each different company tier, each different business has different components to your different comp plans. With that said, I always say that there are 4 elements of well-designed comp plans. They're easy to understand. So they have like 2 or 3 components. We call those paths at Quota Path that can be explained pretty quickly and easily. Any more than that, you end up being way too complex. You can do fewer if you need to, but I like to see a couple of different ways that people can get paid. Built logically, so the idea being that the tiers make sense, the accelerators make sense, the bonuses make sense. It should make sense to everyone involved, and you should be able to explain it really easily. It's motivating to the rep. So the rep feels like the quota is attainable, or they understand that, if I get to this certain point, I'll get paid higher. And that's motivating to them, not demotivating to them. And then finally, it achieves company goals. So if you are designing a comp plan trying to increase the average length of your contract, then paying people more based on the number of months in the contract, or if you're just looking to acquire new logos, then paying people based on the number of new logos that they sign. So those are the kind of the basic elements of a design comp plan for me.
I've always thought, as I've looked at comp plans, that they're both really simple, but also they can be fairly complex. And what I mean by that is when you design incentives into your comp plans, people respond to those incentives, assuming that you hit kind of those first 2 things that you mentioned, which is that they're understandable and people kind of get where they're going. But at the same time, if you get those incentives wrong a little bit, you can get into that demotivating kind of area, right? And so, one of the things I've seen is, and I've made this mistake myself in the past, is, especially if you're early stage and you don't know a ton about your sales cycle and your sales process and exactly what your ASP is going to be, you kind of take a swag at a number, and then it turns out that it's off, right? And it's hard to hit. So how do you find that balance between, setting a goal that is a stretch goal that gets people motivated, but not setting it so far that people feel like it's unattainable?
Yeah, for sure. So there are different thoughts about what your quota should be, and how many people should hit quota. I always say that the general rule of thumb, specifically when talking about SaaS sales, is a 5x on target earnings to quota multiplier. So what I mean by that is, if you have and I'm just going to use round numbers here. If you have a $100,000, you pay somebody $100,000 a year on target, and on target earnings meaning if they hit exactly their quota, how much they would earn. If you have $100,000, it should be split 50-50. So $50,000 base, $50,000 on target commission. And then that should be multiplied by 5. So $500,000 quota annualized. Right. So then if you want quarterly, you're looking at 125, or monthly, it'd be smaller than that. That's a good starting point. With that said, a lot of people who are at that level, like see their numbers, like especially early people see that and they're like, well, wait a minute, no, we're at substantially lower than that. We're at 3x or we're
Right.
at 4x. Is that bad? And
Mhm.
I have a whole slew of data that I can share with you. I think I may have already shared it with you, Hayes, that shows that as your revenue increases, that number, that multiplier will increase. And so,
Mhm.
in the $0 to $1 million ARR range, that might only be 3.5x. So it's not
Right.
the end of the world, but there's also a lot of differing opinions around what percent of your sales team should hit quota.
Mhm.
I am of the opinion that somewhere between 70 and 80% of your sales team should be hitting quota
Mhm.
month after month or quarter after quarter. And so running an analysis with those two things in mind and trying to balance the two of them, if you have historical sales data, so you can
Mhm.
say, all right, this is the quota because it's a 4x multiplier, and that would have been 70% of our reps hitting that quota.
Right. Okay. Yeah, I think the how many people hit quota is a really interesting question because I've certainly seen, comp plans that sort of seem to be designed so that everybody hits quota, which doesn't seem to be super successful. But then you also get into that sort of uncanny, like demotivating valley, right? Where you if less than half the team is hitting quota, then people start to question it. So I think that 70 to 80 or 75 to 80%, was that the sweet spot that you're thinking?
70 to 80, yeah.
Okay. All right.
That some people say 70, some people say 80. I'm sure there are people who say 100, and I'm sure there are people who say
Right.
50, but
Sure.
I tend to be in that 70 to 80% range.
Got it. So, we talked about some of the mechanics that generally apply to comp plans. You mentioned company stage as something that tends to cause comp plans to vary a bit. But what about roles, right? So I think comp plans change. Obviously, you're incenting different behaviors for BDRs or AEs or AMs, or even we can talk a little bit about whether or not success-oriented roles should have quotas attached to them. Um, Talk a little bit about that. Like, what are the things you should be thinking about as you design comp plans for different roles within the revenue organization?
Yeah, for sure. I could talk for 2 hours around how to build BDR comp plans. And I
Okay.
use the
All right.
terms BDR,
Yeah.
SDR, MDR kind of into like in
Interchangeably.
to all mean the same.
Yeah.
Interchangeably. Thank
There
you.
you
That's
go.
the word I was
All
looking for.
right.
And so I use all of those to mean this thing. But when it comes to SDR comp plans, there are two. I say that there are two pure ways of creating a
Mhm.
comp plan. You can pay somebody based on the number of cold calls they make, or
Mhm.
you can pay them based on the amount of revenue that they've generated to the organization, for the organization. And
Right.
the reason being, you have a kind of a supply and demand curve of the amount of inherent benefit to the organization and the amount of control that the SDR has over their compensation. So
Yeah.
if it's you compensate them entirely on the number of cold calls, then they have a ton of control over it, but
Mhm.
there's no real inherent benefit to the organization. Whereas on the other side, they don't have nearly as much control over it, but there's a ton of inherent benefit to the organization. And so
Right.
trying to find kind of and I'm not saying that those are the only two ways of paying. In fact, I don't think either of them are necessarily the best way of paying. But what you're trying to find is a sweet spot in there where the BDR, SDR feels like they have a lot of control, but there's also inherent benefit to the organization. And so a lot of people end up using qualified opportunities or SQLs.
Right. Well, I mean that I like the idea of those two curves kind of intersecting, and I think that fundamental idea of what you control as a rep versus what is of direct value to the organization does get interesting as you get into these roles, which are not directly revenue generating, but either but supportive of revenue generation, like SDRs or like maybe success roles, or sales engineers even, or things like that, right? So it does feel like it might get a little bit easier as you look at AEs and AMs, which are they're responsible for a book of business, right? So are there any things to really be thinking about there that we haven't already discussed when you think about maybe AEs that have sort of different tiers, at different levels in their career when they're ramping? Like, how should you think about that?
Yeah, for sure. So I'm a big proponent of transparency. Now we'll talk a little bit
Mhm.
about transparency. A big proponent of the transparency in comp plans,
Mhm.
and that the logical nature of it. And so I like accelerators and decelerators. I think that those are valuable because it can encourage over attainment, and it doesn't you kind of hedge your bets when it comes to under attainment. If somebody under attains, they're at 50%, they probably shouldn't be getting paid 50% of the amount of commission that they would be getting, because that's an unacceptable level. I'm not a big fan of cliffs when it comes to AE attainment, or AE payout, at least. A cliff being you don't earn anything until you hit 60%, and then you start earning. Those I find to be incredibly demotivating, and encourage sandbagging, and just are just a very poor structure. I see them on occasion within account manager plans. You have, look, you need to get to 70% retention. If you're not at 70% retention, then you're doing something,
not doing your job right.
Right, exactly. You're doing something very wrong. You're almost hurting the organization. And putting that cliff at a reasonable amount, whatever your natural renewal rate might be. If you don't touch these people, they might renew at 50% or something. But the other thing is, when you look at promotions, you end up having, if you follow the 5x OTE to quota ratio and the 50-50 base and bonus structure, you end up with a 10% commission rate. And as you increase your, as you move up the ranks, theoretically they both should stay the same, the 5x and the 50-50, and so therefore it's going to maintain 10%. So a lot of people kind of struggle with that, where it's like, this person is, has a higher quota, but they're getting paid the same amount on each of these deals. Well, that might be the case, but that likely comes with additional BDR support, or additional, better accounts, better territory, what have you, and an increase in your base salary, substantial increase in your base salary.
Okay, well, you said the magic word. You said territory, which is something I've been interested in a lot lately. And so I want to talk about how comp plans intersect with territories. And so you mentioned the idea of, generally speaking, right, we try to give our more senior reps, the ones who are more experienced, more capable of realizing value, we try to give them the better accounts in many cases, right? Because they can extract more value from those accounts than a junior person could. One of the ways that gets done in sales organizations, which I happen to think is somewhat flawed, is by defining geographic territories, where there's someplace in San Francisco, you get that territory and that's super rich, and then you have someplace in the middle of nowhere, or a set of zip codes in the middle of nowhere, and you got to go out and pick up whatever you can off the ground, right? And so sometimes that leads to, it seems to me anyway, that leads to some challenges designing comp plans, because clearly some territories are vastly better than others. So I'm curious about what you've seen and what you recommend, that if you are using geographic territories for some reason, then what are the right ways to design your comp plans in that case?
Yeah, for sure. And I'm also anti-geographic territory, so you're among friends here. I live in Maine, and there aren't very many publicly traded companies in Maine. So if my territory was Maine publicly traded companies versus California, it's pretty different. So yeah, you're absolutely right that it's almost impossible to create a perfectly structured geographic territory when it comes to these are trying to evenly distribute the opportunities, distribute the companies, what have you. I remember when I worked at NASDAQ, I think my territory was like certain zip codes in New York, but only A through L, and certain areas of Virginia, and you're absolutely right. They're very difficult to create evenly. So, but this applies to pretty much any form of territory management. Whether it's alphabetical, or by area, or by industry, or what have you. I wrote a blog post about the most common ways of putting territories together fairly recently. But when it comes to building comp plans for those, they can get a little bit hairy, because is your quota commensurate with your territory opportunity, or does everybody have the same territory or same quota and thereby same commission plan? I mean, ideally that's the case if you feel like your territories are perfectly built, but they're not going to be perfectly built. Even if even if we all have the same number of accounts, if I'm selling to software companies again, and sure, I have all of the software companies in those, and it's the same number of publicly traded companies in San Francisco. Those are going to be software companies in San Francisco, and they're going to be more likely to buy, and they're going to be venture funded. And so there is a real issue with that. When it comes to building a quota around that, I would say try to keep quotas as uniform as possible, and so therefore try to keep your territories as uniform as possible. If you can't, try to create some sort of evening situation, so where like you earn a higher commission rate for selling to certain industries, or you get a certain amount of quota retirement because your territory was smaller or something to that effect. But trying to create as uniform a comp plan as possible is important. And honestly, this comes up also with account management, where my portfolio is going to be different from your portfolio. And so therefore, as much as we try to even them out, they're not going to necessarily be even out.
Right. And I think I think the fairness question is obviously super important here, right? If, going back to demotivating, I think one thing that's super demotivating for reps is they feel like if they feel like, the situation is unfair, if they're being treated unfairly, or, rep A has more opportunity than rep B for whatever reason. So, you mentioned at the top of this, when you were talking about, all the things that go into comp plan design, the last one you mentioned was, delivering the value that the company is looking for, right? I mean, I think let's be real, that's kind of like number one in theory, right? You should be the reason companies design comp plans is because they're trying to build something that they think is going to generate the amount of revenue that they're trying to achieve, right? And so that's kind of, in some ways, that's job number one, even though we like to talk about it as more about equality of opportunity and fairness. But how do you balance that, like, with the reality that if you're you're a sales leader, your job is to deliver, right? With the sense of, we do need to distribute opportunity fairly so that the sellers can at least have, they've got a meritocracy by and large, where they've got the opportunity and it's for them to go out and win the deal. So how do you think about that? If you're a sales leader, how do you think about balancing those two forces?
Yeah, so I do a lot of comp plan consult calls with folks, and that's one of the major questions that I ask them is, what do you want to accomplish with this comp plan? And people always kind of look at me funny, and they're like, well, I want to make sure my reps are paid correctly. And I say, okay, well, what is the end result for the company? And everybody is always like, revenue. Obviously, you idiot. And I'm like, yeah, okay, that's great, but there are a lot of different ways of revenue. So is it you want to get recurring revenue? Is it that you want to get quick revenue, or you want to have long-term contracts? Do you want to establish revenue in a certain market segment? Do you want to establish revenue within a certain area? Maybe geographically it's your retention rate is better in the US than it is in Canada, or what have you. Are you hoping to find? So there are a ton of different ways that you can think about revenue, and that's really where you need to do a consideration of when building your comp plans. In a survey that I ran, only about 25% of comp plans pay differently based on the length of the contract signed. But that's a really important thing for a lot of organizations. A company that I used to work for, that will remain nameless, had a real churn issue. And if you can sign a 2 or a 3 year contract, then and it sounds bad to say lock in, but you lock in that revenue, and you give the customer a longer period of time to see value behind what you're doing. And so incentivizing longer term contracts is really valuable for a lot of organizations. And so when building those comp plans, keep in mind, like, am I going to pay my reps the same for closing a 6-month deal as I am for an 18-month deal if
Right.
it's the same ARR? And that doesn't make a ton of sense for us because we're guaranteeing a lot more money. Does that answer the question?
Yeah, I think it, it does, but it brings up another question, which is, I I do imagine you get that, well, yeah, revenue dummy, right? Like that's what people say, right? But but you're absolutely right that there's good revenue, there's bad revenue, there's strategic revenue, those kinds of things. Uh, One of the challenges with that is as you try to kind of guide your reps down a path, I feel like I've certainly seen comp plans develop a lot of a lot of knobs and switches and levers and things as you kind of like layer these different initiatives. And let's be honest, what you want from your revenue quarter to quarter, especially if you're high growth, changes, right? Or you might change strategically in terms of what you're looking for. So, um, you know, how do you, after a year or so of developing, accelerators and rules, and, we're going to decelerate this and change, and, spiff on this, whatever. How do you kind of come back and say, okay, hold on, we're gonna reset a little bit and make sure that you don't get too far into complexity?
Yeah, I mean, I always have, when I sit down with somebody who has 10 different components to their comp plans,
Mhm.
I try to strip it down to just the most basic. Like, okay, let's say if we're building your comp plan from right now, blank slate,
Mhm.
what percent commission do your reps get on every single deal they close?
Mhm.
And then it comes with like, oh, well, but we, no, just you can only pay your reps one percentage. What is
Right.
it? Okay, it's 10%. All right, so now we can start adding in complexity and seeing, is this really necessary?
Mhm.
Oftentimes people will add in these things that are like, oh, we want to make sure that if somebody closes $1 million deal, we're not paying 10% of that. We need to be, so anything over this amount gets a decent, and it's like, how often does that happen? Oh, it's not happened yet, but we're really worried about it happening.
It's
Okay,
totally gonna,
well,
yeah. Yeah.
yeah, exactly. It's like, okay, if you close $1 million deal, you better pay somebody 10% on that. That's awesome. Like,
Right.
never worry about overpaying a rep based on the
Mhm.
comp plan you've built. Just cut them a
Right.
check.
Right.
I've had situations where I had a check where they were like, "Ooh, we didn't think you were going to close $250,000 deal, and so
Mhm.
we're going to try to." And I was like, I was not happy about that. And so the um when building that comp plan, that's when you can then add in complexities. Okay, so it's 10% unless it's professional services. All right, so your
Mhm.
professional services get paid at a different rate. Do
Mhm.
those need to be accelerated? Probably not. Let's pay that at a flat rate. And so
Right.
now we have these like, okay, we get 10% on software, 5% on professional services because there's a lower margin on those. And then you say, okay, 10%. Do we want to just do a flat 10% or do we want to do accelerators? Is it based
Mhm.
on quota attainment quarterly or monthly? And so building it from scratch and trying to just really like strip away as much as you can and then add in is a better way to go about it than taking your comp plan now with the 15 components and trying to
Mhm.
say like, okay, we can take this one out and we can change this one and we can take this one out. Better to just
Mhm.
start from scratch.
So just sort of come at it from first principles, make sure you understand what you're really trying to drive, and then layer that on from there. And this brings up a question overall, which is just about about change, right? So comp plans change. One of the quickest ways it seems like to decimate a sales team is to roll out a comp plan that people hate, right? So it can be dicey,
I've done it.
right?
I've done it.
Right.
I did it
Okay.
once.
So yeah.
I had a team of about 40 reps. When I was running an SDR team, I rolled out a terrible comp plan and it went down to 14 reps within 6 months. So
Damn.
I've
Okay.
been there.
All right. So, well, without going into too much detail, I mean, what were the lessons learned from that? What would you recommend to people to not do so they don't nuke their team like you did?
Yeah, for sure. So again, I think that it comes back to simplicity. Or simplicity maybe has some negative connotation, like lack of complexity, lack of unnecessary complexity. I won't get into the specifics of the comp plan that I rolled out, but it was very complex and unnecessarily complex. I thought it made sense. I tried explaining it to a few people,
Mhm.
and they were like, I don't really get this, but okay, I trust you because you know the business line the best.
Mhm.
When rolling out a new comp plan, and I recommend trying to do a new comp plan if you're going to at the beginning of the year, or at the beginning at a logical time, and no more than once a year. I ended up having to rip out the comp that I did after about 6 months because of all of the issues. But it was overly complex. So when rolling out a new comp plan, explain it to somebody who, explain to someone on your team. Hey, this is what I'm
Right.
contemplating. What do you think? Try to find a somebody who knows the business, and then try to explain it to somebody who doesn't know the business.
Right.
My poor wife has had to listen to me explain comp plans to her so many times, and she doesn't work in sales. If she can understand it, I'm like, okay, cool, we're off to a good start here.
Right.
And clearly defined as well. Another issue that I've had is like, we're going to pay out 5% on upsells. Well, what are upsells? Are
Mhm.
upsells, if the client's only been a client for 30 days, does that count as an upsell?
Right.
When does it count as an upsell versus a renewal versus a new business opportunity? So trying to just make sure that you have all of your bases covered, you understand the comp plan inside and out, and it is logical before trying to roll it out to a team is very important.
One of the things I've certainly found in these cases is that, going back to transparency, right? Is if you were talking about professional services, maybe we don't pay out an accelerator on that. It certainly helps if you can provide, a rationale for the why. Why are these rules this way, right? So you can say, well, professional services, the margins on professional services suck, right? Like we can't afford to pay out, accelerators, right? So whether or not people like that or are super thrilled with it, or whether or not they'll go out and sell your professional services is a whole other question, but they at least understand the rationale behind it. So I think I've always found that it's effective to be able to at least have a good justification, and the justification can't be like on your $1 million example, well, we just don't want to pay you. Right.
Right.
Yeah. So
Yeah. And the same thing can go for like a quota increase. Hey, we're doubling your quota.
mhm.
If you just said we're doubling your quota, good luck. Don't do that. If you rolled out products and you're doing additional sales training and you're hiring a BDR team and you're doing all of these efforts, fine, you can double the quota,
Right.
because I have all of these other ways of selling. But just doubling the quota because hey, we need more sales is not the right way to
Right.
go about
Yeah, I mean, if you can justify it, say, "Hey, I'm investing in you. You're going to have this support." Now, the expectation is that that investment is gonna pay off, and that you're going to be able to do more, and you'll make more money. We'll make more money, et cetera. Right. So, I want to touch on one other aspect of this, which you brought up in a conversation recently, which I thought was super interesting. Is going back to some of the conversations around fairness and complexity and all of that. I want to talk about how comp plans can impact, diversity, equality, inclusion, sort of the ways that we think about, general equity in the workplace, because sales is an interesting part of the organization where you know most other parts of the organization, people get a salary, it's kind of set in stone. You've got clear if somebody's doing the same job as somebody else and they're getting paid 60%, you've got a clear like discriminatory issue there, whatever. But with sales, theoretically, people have their comp plans and it's a meritocracy and they're going to just go out and do their thing, right? But there's a lot of, I'm guessing, sort of insidious potential components to that, because there is managerial discretion at times. There's things like that. So how should an organization that's committed to those values try to make sure that that their comp plans reflect those?
Yeah, for sure. So to put it bluntly, if you don't have standardized comp plans,
Mhm.
on average, you're likely underpaying the women on your sales team and the people of color on your sales team.
Mhm.
If you can go in and say, oh well, Graham has a different comp plan because he negotiated a higher base salary. It's likely that I'm getting paid more than the woman sitting next to me selling the exact same stuff.
Right.
I've seen some pretty egregious instances of this as I've been going through my comp plan consult, where one person is getting paid 25% commission on a deal and one person is getting paid 12% commission on a deal.
Right.
And I say, wait, what why is this? And they
Mhm.
say, oh, Jimmy negotiated a higher base salary, or and so therefore we have to pay a higher on target earnings or what have you. And so standardizing your comp plans, providing eliminates that. When I joined my last organization, a company called Trendkite, I was the second sales hire, and they offered me, this is the amount of money that you're going to make as a base, this is the amount of money that you're going to make as commission, this is your on target earnings. Second sales hire, and I was like trying to negotiate, and they're like, no, we don't negotiate. This
Mhm.
is the plan. This
Right.
is it. What everybody gets, everybody is going to get as you, and these are the 3 or 4 targets you need to hit in order to get a promotion, and they're
Mhm.
specific and they're defined, and they aren't be a good employee or be a culture fit.
Right.
They are sell $1 million and have a demo to close ratio of 10 to 1.
Right.
And once you hit those, you can move up you can start earning more. But if you don't have that, if you allow people to negotiate, if you have kind of sweetheart deals or unicorn plans,
Mhm.
or instances where the manager determines who gets a promotion, who gets a better territory, and who has all of these other things. Not saying anybody watching this is doing it intentionally, but
Right.
there are people who are going to suffer because of it, and it has nothing to do with their sales skills.
Right. Yeah, I think your point about uh, documenting the plan clearly, and I think reducing the amount of just sort of discretionary things that can happen, right? And I think geographic territories or territories in general can be a tool where this does crop up, right? Because you can, like so and so can get assigned to this territory, and that decision could be, based on, well, they're a really good quote unquote culture fit, right? And I think they've got a ton of potential, and there's a lot of sort of implicit bias that might go into a decision around that, even if it's not intentional, right? So,
Yeah.
yeah, I think that I think that makes a lot of sense, and especially for a very early stage company where you're trying to figure things out, you might think, well, we're just all kind of scrambling to figure it out. Let's not worry too much about like defining this. It's going to change anyway. But by doing that, you're not really being flexible. You're probably creating a situation where people are not able to be successful. That has nothing to do with, like you said, their sales skills. So it seems like something to really watch out for. Um,
Yeah, and the explanation to the person who comes in and says, oh, like it really sucks losing somebody because you offer them $100,000 on target earnings and they need $105,000 on target
right.
earnings. Like that really sucks. But that person who's unwilling, who doesn't understand that and is unwilling to buy into the equality and transparency model
Mhm.
probably isn't a good hire for you anyway.
Awesome. Okay. Well, let's end on that note. I really appreciate the time, Graham. Do you have anything just to share with the audience? Any shout outs for Quota Path, anything like that?
Yeah, I mean, as always, check out QuotaPath. We have the freemium version. People can sign up, track their commissions. Additionally, I do offer comp plan consult calls for anybody who's interested. If you want to just have me just tear up your comp plan, I'm happy to do that. Or if you just need a couple of tweaks or need another set of eyes, happy to do that. It's on our website on quotapath.com, and there's in the resources section, it says comp plan. Doesn't say comp plan consult. I think it says like comp plan review or some
Complaint
strategy
Consult
session.
is
I'm not.
alliterative. It sounds better. You should rename it.
I know. I know. I'll put that in
Yeah,
our marketers here.
it's going to cause growth to skyrocket in your head of growth. So
Yeah.
that's my
Yeah.
gift to you at the end of this call, is just to
Thank you. I appreciate it.
help you do what you already know you should be doing. All right.
Awesome.
Thanks a lot, Graham.
Yeah, you got it. Thank you. Bye.